Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is Wednesday, and of course, that means we have the one and only Matt, the mortgage guy. How you doing, sir?
I'm doing great, Mike. How you doing?
Doing well, Matt. So I want to talk about California homeowners, both homeowners, owner occupants, and investors. I want to specifically talk about PMI, private mortgage insurance. And again, my opinion, you're the mortgage guy. I'm just some guy who looks at the market. I suspect if you bought in California in the last 2 years and you were paying PMI, there's probably a pretty good chance that you could refi, get rid of private mortgage insurance, and probably lower rates, given
Right.
where rates were in 2019.
Oh, for sure. For sure. I mean, especially, you about the end of 2019, rates had ticked up. But rates are very close to their all-time lows. And that's the double whammy, removing mortgage insurance and lowering your interest rate. There's a ton of different people and everyone's scenario is unique. But the favorite ones for me is a homeowner they might have had challenged credit. And so they got a higher interest rate. They got mortgage insurance. Since they've been in their house for 18 months, 24 months and paid on-time mortgage payments, their credit score has gone up,
Oh,
their
wow,
mortgage
yeah.
credit score, and they've got equity. Most markets, right? Like, you've got the San Diegos and you've got the Phoenix, Arizonas, and you've got these 17, 21, humongous increases. But if you put 5 or 10% down and 18 months has passed and it's, a 10 or 12% increase in your specific market, you're going to be in a position to remove mortgage insurance.
Yes.
I love, because a quick example, yesterday, I'm looking at somebody's mortgage statement. Their credit was challenged. I think it was like a 4.875 on an FHA loan.
All right.
In 2019. They reach out, and here's the funny part is their credit has gotten better, but it's not excellent. 674 credit. With 674 credit, remove mortgage insurance, rate and term refinance to right around 3%. They're going to save $500 a month.
What, $6,000 a year?
For somebody whose housing payment is going to go from 2,200 to 17.
Yeah.
That's miraculous. And here's the thing. When they bought and they got themselves into a $2,200 mortgage payment, let's say that they were able to rent something in the neighborhood they wanted to live in for $2,000. And they thought to themselves, I want to be a homeowner. I'm going to pay $200 more.
Yeah.
Now, 2 years later, we've seen rental increases.
Oh yeah. That 2000 is probably 28 or 3.
Yeah. I mean, and maybe it's only 22 or 23.
Oh,
but they're, yeah, let's be conservative. They're refinancing to 1,700.
Exactly.
On a 30-year fix that's going to stay fixed forever. While that rent payment goes 23, 25, 27.50.
Yeah.
In a decade, it's going to cost more than $3,000 a month to live there.
Easy.
They're going to have a $1,700 a month mortgage payment.
Yeah.
And they're paying down the principal. It's going to appreciate, we'll call it 4% a year over time. We're not going to always see double-digit returns. Yeah. Some years will be better than others. It's just the magic of home ownership. And it's something that most anybody can do with a little bit of planning, a little bit of, take care of money, take care of credit. You don't need to be a millionaire, right?
Yeah.
People are putting 3% and 3.5% down. Yeah. And then 40 years later, you look at the average homeowner versus the average renter, and their net worth
close
is hundreds of thousands of dollars difference. And this is why, because, not only are they paying a lesser housing payment where they can use that extra money on something else, but they're paying down the principal. It's appreciating over time. Homeownership's pretty freaking cool, Mike. What do you say?
Yeah, homeownership's good. Owning property is a good thing. Getting 30-year debt's amazing. Lowering your debt payments. Frankly, right now, given rates, I mean, I've said this before, I'm actually adding debt to a free and clear asset. I own something free and clear. I'm going anti Dave Ramsey. I'm borrowing at 4%. Because I want the cash so I can go invest more. I think I can get more than a 4% return. So really, if you bought in California in 2019 or before, and you're paying PMI, I don't want this to sound harsh, but I want it to hit you. You're an idiot. I want you to call or reach out to Matt, the mortgage guy, immediately and
I'll be nice to you. I won't call you an idiot.
That's the nice guy. I'm purposely being aggressive. Again, I want to say, if you bought in California in 2019 and before, and you're paying PMI still, you're an idiot. What does that mean? I hope you email Matt at mattthemortgageguy.com and ask him to help. Because again, $500 a month is a real life example. It's
Right.
crazy.
And let's just take a quick look. That's all it takes is a quick email, matt@mattthemortgageguy.com. You can include your mortgage statement if you've got it. If not, and you just want to connect on the first email to say, hey, I want to, get with you guys and take a look at what a refinance looks like.
Mike called me an idiot. I want to see if I am.
Right. Yeah. Yeah. And then, it's simple. Hey, I think my credit score is about 700. Here's a copy of my mortgage statement. Me and my team probably prepare 100 of these things a month where we say, you know what? You got an excellent interest rate. Your mortgage insurance is only $47 a month. It may or may not make sense. Here's the Excel spreadsheet. Take a look.
Yeah.
In other cases, I've been literally tagging it green light refi, where I'm telling these people like the light is green. If you stay put, you're probably going to get rear-ended and hurt yourself financially, right? Yeah. Like press on the gas. Yeah. Let's get this refinance done for you. And the only thing that I think would hold somebody back is if the job situation was wonky in the last 2 years. And that's where, even if that's the case, let's chat about when you're returning to work, what the pay looks like, how long the lender is going to want you, back in the workforce, because the conversations I have with people that are like, oh my gosh, why did I not call you a year and a half ago?
Yeah.
I've been paying an extra $400 a month. It's real money. It's
real
real money.
money. Yeah.
And I promise you guys, the banks are not going to go bankrupt if you start paying them 2.75% instead of the 4% you're paying them now.
Yeah,
if you stop paying PMI, like those reserve funds where the PMI money goes, they're not going to dry up. Everything's going to be fine. I promise you guys.
Yeah. And what I want you to realize is we're really talking about lowering your payment. But if you're the person out there that wants to lower your term, but you're fine with the payment, great. Instead of having 28 years left, have 23, right? There are all these options. Take what you're paying today. Again, if you're in California, bought 2019 before and paying PMI, reach out to matt@mattthemortgageguy.com, because you can either lower your payment, lower your terms, maybe even take cash out if that's where you want to go. So
now's
the time.
Yeah. And that was the one thing that I was going to add on there is this morning I was listening to something that said there's $9 trillion in quote unquote tappable equity.
Oh my God.
If you are somebody who has faith in yourself that you're going to be able to manage it, and you're like Mike that understands that money is cheap and you can take it at 3 and receive 7 and 8 on the other end in returns, look at a cash out refinance. The good news is no lenders in 2021 are going to allow you to leverage 100%.
Yeah, they're going to protect you. Yeah.
Right. They're protecting you. So even at 75, 80% leverage, if done correctly, if invested in the proper things, you're going to be able to borrow at a low rate and see returns at a higher rate. Like that's the game. I think that a lot of people, I think it was probably you I was listening to earlier, where it's like, if you could borrow at 2 and you borrow at 2 or 3 and receive 7 or 8, like how much would you take? Like
all of it.
Sign me up for a couple $100 million.
Yes. That was my daily financial news this morning, folks. That's why Wall Street is buying houses, because they can borrow at 2 and earn 7. The only answer is I want every dollar I can. So very simple. Thank you, buddy. And again, how can people find you to get out of paying PMI?
Matt@mattthemortgageguy.com. Send me an email there. We will be glad to help you. Currently only licensed in California, more states to come. Stay tuned and we'll announce that in the next month. If you're outside of California, go to greatmortgagebroker.com, fill out that quick form. My team at U Mortgage is gonna be able to handle anything outside of California. So we've got you covered no matter where you're at.
Very cool. Thank you, buddy.